Joe, and good afternoon, everybody, and welcome. Thank you so much for joining us today as we explore this really important subject of growing importance to each one of us, which is using loan finance to support your energy efficiency projects. I'm Nathan Whitaker. I lead the business development and borrower experience at Charity Bank, and I'm joined today by Carolyn Sims, our Director of Lending. Our team at Charity Bank are focused on providing flexible funding solutions to a range of social sector organisations, principally whose needs will not always be met by mainstream finance. Alongside our day jobs, both Carolyn and I serve as trustees within the charity and philanthropy sector, and Carolyn also has a strong affinity for supported housing as a director of the Arms House Consortium. So the plan for the next 30 minutes or so is to unpack Charity Bank's mission to direct specialist social impact loans towards environmental initiatives. As we all know, social sector organisations are facing an extremely challenging operating environment, being asked to deliver more with less resource against a backdrop of rising demand, and in some cases from the most vulnerable in society. At the same time, we all carry an environmental responsibility, which is not just a nice to have, but is core to our future sustainability as we continue to deliver impact for decades to come. So if you take away one single message today, it's that given the scale of the decarbonisation challenge facing us and our sector, that Charity Bank is here to support borrowers with the safeguarding of community, charity, faith, care and social housing assets, recognising that the built environment is one of the biggest emitters of carbon, about 27%. We want today to be practical and relaxed with plenty of time for questions, but we're also very happy to follow up with your organisation individually after the call. In a couple of minutes, I'll be handing over to our guests from the Green Finance Institute. That's Johnny Page, who's the Clean Energy Infrastructure Lead, and Chloe Timperley, who is the Green Mortgage Campaign Lead within the Built Environment Programme area. In their roles, Johnny and Chloe lead efforts to mobilise capital across a range of banks and funders to support the decarbonisation of the built environment and promote energy infrastructure by expanding the green finance market. So we've really invited Johnny and Chloe to help us frame the market challenge and how green funding can support you to meet future compliance with net zero goals. So before we do that, just a little bit about Charity Bank's environmental commitment. So Charity Bank is a fully regulated UK deposit-funded independent bank with a clear purpose. We're here to use finance as a force for good. We exist to support charities, social enterprises, and other impact-driven organisations across the UK, whilst empowering both savers and investors to align their money with their values. We're also on a mission to support environmental impact through directing capital towards energy efficiency and sustainability in the social sector. But rather than be led purely by regulation, we've made a commitment to go much further. And so we're therefore here to support impactful social sector organisations who either hold assets, lease assets, or acquiring assets for social purpose, because we really want to see these protected and safeguarded for generations to come and preventing seeing these becoming stranded assets. We've therefore embedded Healthy Planet into our vision and strategy statements and formed a net zero working group and regularly challenge ourselves internally to direct both our thinking, capital, resources, time towards decarbonisation initiatives. We're proud to hold the Investors in the Environment Green Level accreditation, having achieved a 15% reduction in our own carbon footprint, and we continue to go further to demonstrate our credibility in environmental leadership and responsibility. Charity Bank, we recognise that our lending activities are probably our largest area of environmental impact, with over 600 million in cumulative loans supporting housing, health, education and community projects. And so our current business plan therefore prioritises the future growth of our green lending portfolio to accelerate climate action. I'll now hand over to Johnny from the Green Finance Institute to help us explore this a little bit further.
Thanks, Nathan. So let me just make sure that everyone can see my screen. Share. Here we go. I'm hoping you can see that now. So my name is Johnny Page. I'm the Clean Energy Infrastructure Lead at the Green Finance Institute, and I will let Chloe introduce herself in a moment when she comes up to her slide. For those of you who don't know the Green Finance Institute, we are a non-profit. We exist in order to connect government aspirations through to financial transactions. This is the way that we can plug that gap where there are things that need to happen, whether it be insulating homes, heating, building out clean energy infrastructure. But the banks themselves need to obviously be able to create transactions which make those things a reality. You can see here a list of the things that need to happen in order to make that occur. Chloe, if you want to talk a little bit about yourself. Yes.
Yes, so I work alongside Johnny in the Built Environment programme, and it's really our mission to ensure that every household type has access to a financing solution that enables them to achieve a greener, warmer, more energy efficient, and more future resilient home. And I think the fact that not only does every household type, and that is across single occupancy and multi occupancy, but also within that, we're coming to realise that the green home finance market is really evolving from a more silver bullet mentality, where it was thought that perhaps one type of financing solution could meet the retrofit need, into more of a Swiss Army knife type model, where layered benefits and solutions from across the green home finance and funding landscape are going to be kind of packaged together. So there really is no one size fits all. As Green Mortgage Campaign Lead, my work focuses more on the private side of the market, so homeowners, private landlords, and the like. But there's certainly crossover in all of the things we do. But yeah, a typical homeowner, for example, might decarbonise their home by having an unsecured green loan for the solar panels and some maybe using savings for the battery, and a secured loan, not like a further advance, a discounted or 0% for the heat pump combined with the government's boiler upgrade scheme, and then maybe some cash back on the mortgage. So I think that really shows as an example of how it's something that, all of these financing options will complement each other. And the landscape is growing. So we have a range of products and solutions that are both existing in the market and more at the mature end, notably green mortgages, which I'll talk about in a second, but also green unsecured loans, and also kind of more infrastructure level solutions that Johnny deals with. But also stuff that isn't hasn't yet come to market, but that is new financial mechanisms designed to meet certain needs, such as green rental agreements, and property linked finance, which we will go into in a moment. Before I move on to the next slide as well, I thought it was worth mentioning, because the Energy Savings Trust was mentioned, we've also just launched a retrofit partnerships hub, which shows all of the banks and building societies that are currently working with third parties. I say all of them, to our knowledge, so we can add more as time goes on, but to provide these ancillary retrofit services that actually help, the retrofit journey, not necessarily financing products per se, but things like home energy surveys, third party offers on retrofit solutions, things like that. So we've collated all of that in a hub, which is a resource as well on our website. So that's a broad overview of what the Built Environment programme is doing. And Johnny, if you want to move on to the next slide, where we can look at the main products, solutions currently in the green home finance landscape.
Sure. And we will sort of split this up between Chloe and I, looking at multi-tenancy and single tenancy. So on this side, we tend to look at things which will be requiring sort of larger infrastructure type project finance, commercial finance. One of the areas which I'll talk about in a second is heat network financing, which is very much focused on these large multi-million, if not billion-pound projects. Then we've got things like heat and energy as a service, which is a good example of where the GFI specializes not just in creating financial solutions, but also has to look at things like policy blockers that are standing in the way of capital otherwise flowing into a sector that investors want to access. And social housing solutions, as we've talked about here, and I'll touch briefly on later, is our next big focus. Is looking at how we can help these investors and asset owners bring these buildings up to standard for the people who don't necessarily have immediate control or access to be able to upgrade their own buildings because they're a part of a social housing or whatever it might be. Okay.
So that's the multi-occupancy building side. And then on the single occupancy, we've got, of course, my area of specialism, green mortgages. I've got a case study on that, so I won't go into detail here, but it's probably the most well-known area of the green home finance landscape with 93 products and propositions out there. Again, we have a hub of them on the website if you want to kind of go and check them out and see what the lay of the land looks like there. Then next we have unsecured green home financing solutions. So this can be unsecured green home loans that are at a discount to a regular commercial, it's not commercial, sorry, a regular high street sort of unsecured loan. And also point of sale finance where the loan is actually attached to the technology and it's kind of sold as a package. And the equivalent hub for that is due to be published shortly, so watch this space for that one. And these tend to be shorter term than green mortgages, and are perhaps more flexible because sometimes green mortgages can be tied, whether people's ability to access finance is tied to whether they're ready to remortgage, whether they are able to access further borrowing mid-term, if they're in a fixed rate deal. Whereas, unsecured can be something that may be taken out at any time. But the flip side is that it can be more expensive and on a monthly basis because it is shorter term. Obviously, total cost basis could be cheaper because you're not paying over so many years. But the two really very much complement each other. And these are the kind of ones that are already in the market. And then if we go on to what's next, I think property linked finance. Yes. So this is a flagship area the GFI is focusing on to try to really overcome that upfront cost barrier. And it's modelled after a mechanism that's been deployed successfully in the US called PACE, where essentially the financing runs with the land and not with the individual. So you can sell the property on with the financing attached for the new owner to then continue servicing. And it ensures that whoever is currently residing in that property is the one that is paying for the benefits of the retrofit and the kind of new cleaner technology that the financing was taken out to enable. So that's something that, as Johnny said, and as mentioned at the beginning, of how the GFI works across these different, between government and private sector. It's an example of something that does need legislative change to bring into the private residential sector, but we're kind of collaborating with multiple stakeholders on that front to be able to bring a pilot to market. And then the last one to mention as well is green rental agreements. And this is a model that was developed to overcome the split incentive problem and is the issue of how do we get landlords to invest in their properties when there is a large upfront capital investment, but there isn't an immediate benefit to those private landlords in terms of bill savings and that's immediately realised. So there's a kind of an incentive-based issue there. So the idea is to create a package of rent and bills that enables the landlord to benefit from the bill reduction that the retrofit will realise post-retrofit. So the tenant, from the tenant's point of view, they're paying the same pre and post retrofit, but post retrofit, some of the money that was being spent on bills can be redirected to service the financing costs of the retrofit. So all a smorgasbord of models there that we are currently working on at various stages of maturity. But I think we're just going to go into a couple of very quick case studies for you, and then we've got a takeaway slide as well, showing that you can look at in more depth. So green mortgages are, as I mentioned, probably the most mature area of the product landscape and really moving some serious sums here. So we think between 9 and 14 billion a year is being lent in green mortgage capital, which constitutes roughly between 5 to 8% of all gross advances. And this is a market that is on a growth trajectory. As you can see from this steep upwards line here, the GFI has been very much involved with this market from the start. And it's not just, I think the stereotypical conception of a green mortgage is a few basis points discount on the rate. So you just get a slight cheaper mortgage for having a greener home. That is part of it, but there are also other solutions like further advances, subsidised or 0%, which is additional borrowing during the mortgage term. You've got cashback offers, sometimes up to £10,000 in advance to be able to retrofit the property. That then in exchange for a slightly higher rate or a longer fixed term, the lender will give the upfront cash to the customer to make those improvements. And another emerging area is enhanced borrowing propositions that actually reflect the fact that loan performance is better when the security property is more efficient. And also there will be more in the budget, in the household budget, to service the mortgage if the bill's cheaper. So that can be reflected in affordability calculations and actually allow borrowers to access greater loan sizes to be able to purchase or indeed retrofit or self-build a home. So that's kind of a whistle-stop tour of the green mortgages market. I'll hand over to Johnny now to cover his work stream or key area, a case study in his work stream.
Sure. Thanks, Chloe. So very quickly, so one of the key aspirations of the government is to decarbonize heat at scale using heat networks. These are things which are, so you take a large energy source, it could be something which is built specifically for it, an air source heat pump. It could be something where you're taking waste heat from, say, sewer, from data centers, from industrial processes. There's lots of exciting ways you can do it. And pumping that heat around the city in order to heat homes. Great idea, really huge in Europe, and they're funded quite extensively. We have struggled to build them at scale in the UK. There's lots of reasons for that we won't get into, but if we can do it, and if we can find ways to finance them in more affordable ways, e.g. by using debt, we believe we can significantly lower the cost of the heating that the end consumer accesses. So the solution that we're looking at, the Heat Network Catalytic Fund, it leverages government's grant in a pretty novel way in order to allow a public financial institution like the National Wealth Fund to lend to networks at a significantly reduced rate. That can get passed on to consumers, or the end user rather. For example, in this model that we looked at here, 9% reduction in the heat tariffs, or a 44% reduction in those connection charges, which, for those who aren't aware, are pretty significant payments, which are often reasons why people don't join these networks. If we can do this, then we can bring more debt into the market, which currently doesn't exist. That should unlock billions of more investors that can access this market that currently aren't able to. That should get these projects through to financial close sooner. And if we can get them through to financial close sooner, we can get them built quicker, we can get them cheaper, we can get more people on the network, which should create a positive feedback loop, which gets these things closer to that 20% of of market share, where they're currently sort of around about 3%. There's lots of secondary benefits here, of course, reducing carbon impact, jobs, etc. But the key thing that we're focusing on here is reducing costs and accelerating that financial close. So here is a quick one. We're not going to go through this now, but a quick thing which we can have a look at after this call to see sort of the different ways we're looking at single building solutions, single and multiple building solutions, and those multiple building solutions. And we're obviously very keen to talk to anyone who has any ideas, any questions, any ways that they think this could work in their world. Thank you.
Thank you, Johnny and Chloe, for that. It's really helpful, and I think we'll touch on some of those themes as we move on. So I'm now going to share more about some of the recent green finance initiatives of Charity Bank within our sector, and then we'll also share some client case studies of clients who've benefited in 2025. So this year we completed a green blended finance program in conjunction with Access, the Foundation for Social Investment. And that delivered both a mixture of grants and loan funding, which helped make green projects more affordable for borrowers. It also funded on-site energy assessments to help borrowers support them with their investments. So those on-site energy assessments helped assess SAP scores, EPCs, along with future investment opportunities, which ultimately then unlocked another 1.7 million of grants and 2.3 million of Charity Bank loans to enable clients to invest directly in energy efficient retrofit building improvements largely, but some also were renewable energy investments. And we even supported a little bit of biodiversity, and we'll touch on that as well in terms of an organisation supporting that. We're really proud of the scale of the programme, and shortly you'll hear more about some of those projects. Now, why am I telling you about a programme that's closed? Probably firstly because we will be launching more programmes, hopefully like this in the future, in conjunction with other social investors, but also because what I think it can convey is the importance of loan finance alongside grant finance to support the leveraging up and the scaling up of projects. And so if you as an organisation are accessing grant funding, or you've raised some funding to support energy investment, come and talk to us, because it might be that a loan can also be part of the solution. As Chloe shared, the solution is not always a silver bullet, and there's a range of capital sometimes required in the structure to support and maximise impact, both in terms of your social impact you're delivering, but also the environmental impact. So why is kind of this important, and how are some of the ways that you as borrowers can benefit from green loans and green finance? Well, there's 4 reasons here. Most pressing, as we all know, energy price inflation we've seen is impacting our operational costs as a sector. It's impacting energy consumption, and that extends obviously both to our service users, community users, tenants, as well as our direct P&Ls. Secondly, there's a direct measurable carbon emission reduction through funding projects like solar panels, heat pumps, and insulation. Thirdly, improved EPC ratings will help meet future and current energy performance standards, future-proofing assets, and avoiding the problems of stranded assets, which we as a sector want to avoid. We've worked really hard to help organisations acquire those assets. We also want to support them in protecting them from becoming stranded assets. And as Chloe touched on, the green rental agreement is a way for a landlord or an investor to recoup the financing costs of that investment in improving the energy performance of the property. But I think then finally, there's really strong evidence that lower utility bills and enhanced sustainability attracts further funding and community support, which in turn improves the financial resilience of the organisation making the original investment. I'm just going to share a couple of those examples briefly. I touched on one of them, the biodiversity example. So Plant One Cornwall was a client who benefited from that programme with us, and they actually used the funding to plant thousands of trees, which boosted biodiversity and carbon capture, and that delivered a number of positive impacts. So the initial loan that we provided was a short-term bridge loan, and that enabled them to upfront fund the costs of tree planting, which then unlocked a grant and reimbursed and repaid the loan. But that's the scale of that impact went beyond the 18,000 or so trees that were planted. Obviously, it delivered strong community engagement, volunteer events, and corporate planting days, and enabled some of those things to happen, which was the workforce and the labour that then obviously was leveraged. They were then able to access a subsequent loan from us alongside a small grant, which helped them to then scale their organisation and build resilience. And obviously that's led to both sustainability of that organisation, but also biodiversity restoration and carbon sequestration, delivering strong environmental benefits. And then the second customer that we supported, the second example I'm sharing, was an organisation called BHT Sussex, which is a specialist provider of supported housing. And we extended a much larger loan to this organisation this year of 3 million on an interest-only basis, which was being used to upgrade social housing stock to meet future EPC compliance. But we also combined that loan with a grant and some blended finance, which directly funded insulation and heating system upgrades. And so that loan will provide double benefits. Clearly, there's social environmental impact captured through lower emissions, but tenants benefit from lower energy bills, and it aligns with both UK Net Zero and NHS sustainability requirements and good home standards. I'm going to now hand over to Carolyn, who's going to talk about a little bit more in depth about some of her borrowers that we've supported.
Good afternoon, everybody. I want to start by talking about Lawrence Sheriff Almshouses. And in fact, we're going to show you a video as well. You'll hear actually from the almshouse themselves. They went on a bit of a journey. Lawrence Sheriff Almshouses are based in Rugby, very close to Rugby School. And at the point at which I met them, it was quite a sad story, really. They had 11 bungalows that were in a really poor state of repair. They're let to single men who have got connections with Rugby. But these were almshouses, single story. They had fronts that were single brick skin. They were unattractive. They were really energy inefficient. And the temptation was actually to demolish the properties and start all over again. But the organisation didn't have the finances for that. Unfortunately, they'd been the victim of a significant fraud by the person who was their clerk and who had basically taken all of their savings away. So they were faced with a real challenge. How do they bring these properties up to modern day living standards, fit for purpose, and to make them more energy efficient? So working with them, they've got, he's a very creative and impressive chairman. He worked hard with the local authority and also with other charitable trusts and foundations to pull together a pot of money to enable them to completely refurbish the 11 bungalows and to make them great homes for people to live in. We supported them through a loan from our main loan book of £300,000. We also provided them with a green loan of £90,000 and a green grant of £60,000. And they're now left with beautiful new homes. I was there only yesterday visiting the site. And they are actually in the process of building 4 new bungalows as well at the far end of the site. They're very keen to take some more green loan funding from us if we have some available. And we're just going to show you a little video to show you the work that they actually managed to achieve on site. Today I'm at Lawrence Sheriff Almshouses in Rugby. I first met the almshouse about 3 years ago when they were faced with a significant problem. They had no money and they had 11 almshouses that quite frankly were probably some of the worst I'd seen. Our conversations then began. We talked about how we could possibly support the almshouse, what their options were, because they were very keen to retain almshouses within Rugby. And so began their journey. We've provided them with sufficient funding to enable them to remodel 11 almshouses into 11 units of really good standard and energy efficient accommodation.
So the complete remodelling went into discussion 2-3 years ago now, when we looked at the properties, and I became a trustee along with another trustee from Rugby School, and that was the energy ratings of the properties were the lowest that they could be, an E, and the properties were actually in a very poor state of condition. I mean, everybody that's been on site and looks at the old 1960s single bed properties, you know, with the bricks and the no insulation in the roof and very poor quality, and then they look around and look at around the rendering and the way the properties have been done and remodelled, I think is just goes to show that people will be safe, warm here over the few years or however long they want to live here for, which is what we're about as an almshouse. And you know, with the extra solar panels that we can bring in, that will help with energy bills, but it also helps the charity, because with the export for that we can put that into the maintenance of the site going forward as well. And of course we couldn't have done that without the Green Deal from the Charity Bank.
In my conversations with Lawrence Sheriff, it became apparent that they wanted to make these buildings more energy efficient for their residents, reducing their energy costs. At the time, Charity Bank were running a green energy efficiency programme to help borrowers make their buildings more energy efficient. We were able to provide them with a mixture of grant and loan for those energy efficiency works. It meant that their borrowing requirement reduced and hence their overall loan repayments reduced, which has made the whole project more financially viable for them. So we were delighted to be able to do that.
The position about working with the Charity Bank, what I found is that they came out to site. You're actually speaking to human beings, and therefore, you can get into the detail and they could understand the story of where you're coming from and where you're trying to get to. And they helped and gave us advice on that. Not necessarily punting for business, but actually sort of saying, well, had you thought about this? Had you thought about that? And that's, invaluable to somebody if you're looking at these projects from day one. And then as you walk down that road, you're sort of doing it together. And then once you start doing it together, the Charity Bank was always there, so we can always pick up the phone, we can have those conversations, and they find you a better way, if you have got a loan with them, of addressing those loans. So it's more of a partnership rather than just a faceless high street bank.
And I think what it's worth just emphasising with Lawrence Sheriff Almshouses is, as is the case with most almshouses, they don't have any staff. So we're talking purely about an unpaid board of individuals that work tirelessly to try and prevent good quality accommodation. And I think that video just shows what can be achieved. And as I said earlier, they overcame a huge fraud. Basically, someone ran off with all of their reserves. So they really had very little to put into it. But they just pushed and pushed. They knew what they wanted to achieve. And the result is quite remarkable, really. And then the other one we just wanted to share with you is Frontiers Charitable Trust, or they're also known as the King's Church in Eastbourne. They are a very active and vibrant church in Eastbourne. They're way more than just a place of worship. They have older persons provision, mother and toddlers clubs, youth clubs. They provide in-depth services for the homeless. They really are very much a part of the Eastbourne community. And they operate from a very large former Harris Carpets warehouse. For some of you that are of my age, you may remember Harris Carpets. But anyway, huge, great warehouse, and it was completely energy inefficient. And they didn't really know what to do. Their energy costs were going through the roof at the same time as energy costs were escalating anyway. So they had a survey done to look at options, and they then approached us to see what we could do, whether we were able to help them. And we actually instructed an energy efficiency audit, which was paid for through our Green Loans programme. And it looked at all the different options that the organisation could undertake to try and reduce their energy costs. They ended up recladding the building. They had roof insulation put in and solar PVs. To help them do this work, we lent them £455,000, of which 365,000 came from our main loan book and 90,000 was a green loan. And in addition, we gave them a £60,000 grant, which just helped them make the whole thing more affordable. The solar installation alone is saving them nearly 19,000 a year, as they managed to have 238 panels installed on their roof. It was a very large roof. So it just shows it's not just about taking residential properties and improving energy efficiency there, but also for commercial buildings as well. There are opportunities to reduce your energy costs, and they can pay for themselves. Thank you.
Carolyn, those two stories are very inspiring. The first one particularly so, given the situation that organisation faced. So thank you for sharing that. And I think what both of those stories show is the ambition of the client, the ambition that came through those boards and those trustees, and the vision they had to transform the energy efficiency of those properties to support their impact and safeguard it for the future. So in terms of our own ambition, really we want to align that with your ambition. And so from 2026 and beyond, we really want to scale up the number of clients we support in this way through a £50 million pledge or energy efficiency funding commitment. And this is something that we're making as a bank over the next 3 years. And just in terms of the scale, we lend about 100 million a year. So this is a big commitment to us. And we really want to help organisations scale retrofit financing, particularly for community assets and housing assets, social and supported housing assets, where we help provide capital towards some of the most vulnerable individuals being housed in the UK. So any dedicated green lending provided by Charity Bank will support charities and housing providers with retrofitting of properties, improving the energy efficiency of those properties, and help them on their pathway to net zero. There is no single solution, and so this is effectively a conversation that we'd like to initiate with borrowers. Loan amounts can be anything up to 3 million or more, potentially per borrower, with existing loans being added, or we can even, as we mentioned earlier in the call, leverage existing grants or fundraising that's already been risen for community initiatives. We can offer discounted interest rates and lower arrangement fees sometimes for the most high impact projects, so do talk to us, particularly where there's a direct link into both social and environmental impact. Where possible, we'll use tools like interest only in certain situations and extend our term and give as much certainty as possible because these decisions are long-term investments. And all of our borrowers are eligible for requesting energy efficiency funding from this fund. To help the sector, we've also forged a partnership in 2025 with the Energy Savings Trust, and this provides particularly social sector organisations who own or rent residential properties, who lease residential properties, with a free self-assessment, an online energy assessment. Now, it might be that before making large investments, a physical energy assessment and audit is required. But really, this tool is there just to start the conversation and to help organisations understand what the energy savings are available on each property. We'll share about more how that works on the next slide. And then finally, we're also open to exploring biodiversity opportunities where we can look at carbon offset projects, and we've got a couple of those in our pipeline at present. So I briefly mentioned the partnership with the Energy Savings Trust. So really, this is centrally an initiative that we've launched for free as a tool on our website for housing providers. Just want to move on the slides, thanks. Now, this tool is available on our website as a free resource for the sector. So it's not just for Charity Bank borrowers, it's for anyone in the sector who operates social housing or residential assets. It's a free resource, provides personalised energy action plans, indicative EPC ratings. So even if the property hasn't had an EPC rating, it can support with modelling that EPC based on the largest database of EPC information and algorithms in the country. It can support then decisions around costs. Different scenarios can be put in around meeting minimum EPC requirements or meeting certain energy saving targets. And then that helps just build a bespoke investment plan for that property. Now, beyond that, we can support with portfolio landlords, anyone who is looking at working on scale. The Energy Savings Trust also provides other analytical tools to support some of that. And all of our colleagues are encouraged to promote the tool and the other home analytics tools to borrowers and prospects, really, to help us to provide really good insight to organisations that are interested in going on this journey and making energy efficiency savings to their properties. So we'd really encourage you to take a look at that. It's available on our website, but as I say, if more bespoke guidance is required, we can support that as well. And then just finally, really, if we just go on to the final slides, we're going to pause in a moment for some Q&A, and we'd really welcome specific questions about the programmes or loans we've provided in 2025 and what our plans are for next year. But here's just some of the recognition the team has received in 2025. So we were winners of 4 awards this year within both the social banking market, but also the mainstream banking market, where we won an award for Specialist Lender of the Year at the NACFB Commercial Lender Awards a few weeks ago. We're also really proud to have been shortlisted for Investor in the Environment Awards and the King's Award for Enterprise for Sustainable Development. So these are just some of the commitments that show how invested we really are in this area. So I hope the last half an hour or so has been helpful, and we've been able to convey that Charity Bank is really here to support you and help you achieve your own organisation's sustainability goals with practical advice and also funding to support you on that journey. We're just going to pause now for any questions, but we'd also encourage you to connect directly with us afterwards for a tailored follow-up meeting. Thanks very much.
And if anyone wants to use the Q&A function on the bottom, we're already seeing some questions come through. So if you want to use that Q&A box and any questions, put them in there. The first question that we've got to come across is, how can green finance help my organisation grow? So you've talked about kind of ways in which people can redevelop their buildings, but can kind of green finance help them grow?
Yeah, so I think this is partly about growth, but also about sustainability. So I think firstly, it's about making sure that the organisation is safeguarded for the future. And so what we do when we work with a client is we actually sit down, really understand your plans, your strategy. We'll look at your stock. We'll look at all the assets that you own as an organisation and that you manage, and we'll work with you on a tailored plan to support you. I think it can help. Green finance can help you grow. So we know that 44% of borrowers that took out a loan from Charity Bank have been able to demonstrate real growth, both in terms of service delivery, safeguarding that, and social impact for the future. So yeah.
Great, thank you for that, Nathan. We've had a question come in from Billy. He missed part of the webinar. So Billy, we will have the full recording sent to you on email as well, so you can listen back. He's interested in how to get support, and linked to that really is, how do you start the process of inquiring about a green loan? Carolyn, do you want to?
Yeah. I think, come and talk to us if you're interested. Come and have a chat. As Nathan indicated at the beginning of the webinar, our current green loan programme that we ran very successfully during 2025 is currently fully utilised. We have applied for some top-up funding. We're hoping to run a much more significant programme next year. That our ordinary loan programme is still available, and of course our ordinary loan programme can be used for energy efficiency works. It just doesn't come with grant attached. But have a conversation with us, reach out to us, and then we can talk through with you what your options are. There may be other pots of money out there as well that we can direct you to, but we're fully aware of sort of what's available for social sector organisations. And if we can't help you, then we can always signpost you into the right direction. But yeah, start that conversation with us, get in touch. Contact details are on our website. They're at the end of the webinar slide presentation as well, I believe. So we'll have our contact details to pick up the phone to us.
Yeah, so and we'll send an email out to everyone after the session as well with kind of the slides and the tools and contacts of everyone today, so you'll be able to respond back or get in touch with anyone who you need to. If you do have any other questions, please do add them into the chat. But the next one, Carolyn, if you want to take this as well, if that's okay, is someone's asking, what if they have a collection of older buildings with people living in them? So I'm surmising here that potentially the buildings that have people who are renting them at the moment. How do you go about a green project when you have people living in the buildings? I think we've seen on the video there, it looked like people were there already and had to be. Yeah. So maybe just talk a little bit about that.
I think it really does depend on the scope of the works. I mean, I think your starting point with anything is to get an energy efficiency audit or survey done, and they can look at the properties and let you know then what sorts of works can be done. They should then give you an indication of cost, and then what the savings would be if you go ahead with those works, and then you can decide the works that you want to do. A lot of the works can be done with residents in situ. In the case of Lawrence Sheriff Arms Houses, it was significant works. It was also around remodelling. They provided new bathrooms and new kitchens. And so they did move the residents out. They worked with them to try and help them find alternative places to live while the works were being done. And actually what they did was they did it in two separate parts. So they got 6 residents to vacate their bungalows, and they fully modernised and refurbished them. Some of the residents didn't want to come back. They'd moved on. They found other places they were happy in. And then they managed then to decant the remaining residents into some of the new properties, and then they could tackle the second tranche of properties as well. So maybe you have that option that you can move the residents around, or maybe you just have to vacate them, or you do the work with the residents in situ. As I've said, it really does depend on the scale of the works that you want to undertake.
Great, thank you, Carolyn. Kind of slightly different question now, but in terms of the energy savings tool, Nathan, maybe you can take a bit on this one. Is it only for larger organisations? Someone's asked.
No, that's a great question. So the energy savings tool that we've put on our website is accessible to anyone. So anyone who is either an owner or a tenant, you can use it for your own property. But really, it's for single. It's a tool that's there for single property situations. You could run the property through it multiple times, but effectively what you do is you put in the postcode of the property. That then locates the property using the what we call the UPRN, the unique property reference number. So every asset in the UK, every property in the UK has a UPRN, and then from there it draws information from the Energy Savings Trust database, either about that specific property, if there has been an energy performance certificate on that property. But if that doesn't exist, what it does is it then interrogates the database for neighbouring properties of a similar size, and then you can use the tool to refine based on what you know about the property, the square footage of the property, any upgrades that have taken place to the property. And what it will do is it will then model an EPC if you haven't got an EPC for that specific asset. That then gives you a starting point to make informed decisions around. From there, you can then move into the next stage, which is to produce a bespoke plan for that property, which enables you to say how much you have to invest. So if you only had £10,000 to invest, it would give you a range of investment opportunities, and it would tell you what both the cost savings, the energy cost savings, and the carbon savings would be for each of those investments. And it would really help you to prioritize and rack stank those, so you're able to effectively make decisions about your investment in capital into that. So that's what that tool is there for. But like I say, if you're a larger organisation, housing association, you have a lot of property, then we can also provide more bespoke tools. So there's also other analytical tools that are available from the Energy Savings Trust. They can actually come and do a portfolio assessment for a borrower, and provide you with bespoke reports and support. Some of our clients, some of the larger borrowers, have actually got employed energy assessors within their organisations, but for much smaller organisations, charities, community organisations, that isn't possible, and therefore we can help guide you on this journey.
I think it's also fair to say most of the staff at Charity Bank have probably run their own properties through the energy savings tool as well. It's always interesting to see what it says.
No, great, thank you both. And the next question now, so we'll be wrapping up from questions in just a moment. So if you do have any kind of final questions, please do get them in on the Q&A function at the bottom of the screen. So this question I'll ask to both Charity Bank and GFI separately. So first of all, to Charity Bank, what sectors do you lend to? So what sectors do you work with? So I know we've mentioned quite a bit of residential during this presentation, but maybe you can just give us an idea of just overall, Carolyn.
Yes, so Charity Bank is first and foremost a social impact lender. So we have sector areas where we lend more extensively, and our largest area of lending is into the affordable housing space in the widest sense, almshouses, housing associations, community land trusts, etc. But what means the most to us is social impact. So it doesn't really matter what sector you operate in. It's the benefit that you're having within your local community or with disadvantaged groups. So when we begin talking to organisations, that's the questions we first want to understand, the work that you're doing and how it benefits others. We're not so tied up on legal structure either. We might be called Charity Bank, but it doesn't mean to say you've got to be a charity to borrow from us. We aren't worried so much about the legal structure. It is all about what you do, how you help people and communities, and how a loan that we make available to you will further the support and work that you do.
Great, thank you, Carolyn. And to GFI, in terms of the sectors you work with, do you want to give a little bit of an overview?
We, just to clarify, so we don't lend ourselves when we are an enabler. So we both innovate and help innovators who have come up with financial solutions to get them into the marketplace. And we also work with government to remove policy blockers, which are preventing capital otherwise flowing. That said, in the social housing space, I can give a couple of relevant examples here. We, I think 4 years ago, worked with the National Wealth Fund to highlight how they could support lenders into this sector to catalyze more capital into this market. And we did that by suggesting that they focus on a social housing guarantee. So that has enabled banks like NatWest and Lloyds and Barclays to lend to this sector at in a way that they wouldn't otherwise be able to, with the guarantee of the National Wealth Fund enabling that capital coming in. We also work with independent organizations who are themselves lending, so places like Zero and Talana, who have their things like their energy savings guarantees, which we sort of help support bring into the marketplace. And then you've got, as I say, something like in the heat space, we have the Heat Network Catalytic Fund. Chloe is focusing on sort of aggregating these green mortgages. We're helping to find what green loans can look like so that banks can provide them to both consumers, and we have some on the commercial side as well. So that's probably very broadly speaking, but probably what's most relevant to the organisations here is the way that we work with organisations like Charity Bank. We to help them.
Thank you, Johnny.
Deliver.
I think as well, it's worth mentioning here that an emerging area is to look at those multi-tenure challenges. And I know particularly for the social rented sector, this can be a problem with the legacy of right to buy and shared ownership tenants as well. You haven't got a kind of blanket approach, and with the need to kind of consult leaseholders on major works, there's a real need to ensure buy-in to any proposed project. And so ensuring that, if there's private landlords or private owners in the mix, that they also have access to appropriate solutions, and crucially are consulted and brought in at an early stage so that they don't block a project and also don't feel like that this is happening over their heads. And also that they have access to affordable financing solutions, because, it's no good installing a shiny new decarbonised heat network if then the private leaseholders cannot afford the connection charges. So it's about kind of thinking about this in a more joined up, systematic way. But with, as Johnny's mentioned, with models like Zero and Energy Sprung, finance can really help to kind of scale up these models that, where the energy bill, with homes that no longer have a gas bill after the retrofit, that creates scope to charge tenants a comfort plan that's equal or less than the previous bill, and that allowing the social landlord to gradually recoup its initial investment. So we kind of work alongside these organisations to connect them with finance to make these models more scalable.
Fantastic. Thank you very much for talking through that. So we haven't got any more questions now, but just to run through kind of the next webinar. So for us, this is the second of our series. So we're doing a webinar every few months on loan finance and Charity Bank generally. And we'd like you to help us shape our next webinar. So we will be sending out a short little survey just to kind of get the subjects that you'd find most useful or interesting to learn about in our next webinar. And we can see kind of what contacts and organisations we can bring in to help kind of bring some of your kind of subjects that you want to learn about to life. So that's what we're doing next. It'll be February time that we will launch that webinar. We'll send it out in the next few weeks, kind of the date. So please keep an eye on your inbox and on social media for when that date gets set, if that's okay. And just finally, we've just got people's contact details on some slides here. So there's QR codes and contact details. This deck will be sent out to everyone on the call. They'll also be available on our social media channels and our website. So if you do have any questions or you want to ask about anything that you heard today, please do get in touch. But that's it from us. Thank you very much, everyone, and have a great week.